Good morning, Team Top Step, my futures family. It is time now for the market prep, soon to be called the opening call. Today is Thursday, August the 3rd. My name is John Hoagland. Thanks for trusting me with your time. And as always, we mention every morning, our focus is seeking accurate context in these markets, always remembering risk management and remaining patient in our trading. This morning, economic numbers. 6 o'clock this morning, the Bank of England rate decision came out as expected. They've raised rates 25 basis points to 5.25%. A lot of rhetoric coming from the Bank of England and all of those participants talking about maybe another 25 basis point rate hike, maybe not. They're not quite sure. So we're going to have to see, much like the FOMC, what happens over time. The jobless claims numbers came out this morning. They were expected to be a little bit higher than last week's, coming out at 227,000, and it's exactly what it came out as, and as well as the continuing jobless claims. They were looking for 1.7 million. It came out 1.7 million exactly. Productivity and costs, a little increase in U.S. productivity and a little bit lower costs. So that's kind of good information, I think. 8:45 this morning, we're looking for the PMI composite final. Probably not going to be all that impactful to the markets. But 9 o'clock, factory orders and IAM services index due out. And then 9:30, the nat gas inventory number due out. As always, we're looking at these markets and seeing what we think, what we may find as opportunities, and we are always prepared before entering the markets. That's what we're doing here. I've been preparing for an hour or so, and I'm looking forward to seeing what kind of opportunities we can find in these markets today. So far, U.S. stock indices continue to test lower after the Fitch credit rating cut of the U.S. debt. The focus is on now employment numbers. We have the employment numbers from today, but don't forget tomorrow is the unemployment rate, non-farm payrolls, private non-farm payrolls, all of that information being anticipated today. Not just those numbers, but we have a pretty long list of earnings today. ConocoPhillips missing as far as earnings per share is concerned. Anheuser-Busch with mixed results, beating earnings per share, but with a loss in revenues. And Cigna this morning, both categories looking higher. The big numbers today, of course, will be after the close. Apple and Amazon represent 10% of the value of the S&P. So they're going to be pretty impactful at the end of the day today and into tomorrow with that NFP, non-farm payrolls, and unemployment rate numbers tomorrow. Crude prices continue or drove lower yesterday after even large draws in U.S. inventory were reported. It's being reported that that is a prediction from Fitch, the credit rating agency that lowered the U.S. Credit rating yesterday, that they're kind of looking for or predicting recession here in the U.S. near the end of the year. So a lot of kind of risk-off appetite happening these days. We're seeing the VIX up another 4% or 4+% this morning after being up about 10% yesterday. It's still only at 16.85%. So showing a hint of risk-off appetite. The dollar index is, again, slightly higher this morning, 102.73. Coming way off those below 100 numbers we saw recently. And the yield on the 10-year continues to leak to the upside, 4.15%, kind of feeding that risk-off appetite that we saw yesterday, and we may be seeing still a little bit here this morning. As always, make sure you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep. And make sure you subscribe to our YouTube channel so you can get notified when we do go live. Good morning, everybody. Dimitar, first in the room, winning the prize. Caprice, good morning. Dan Lacey says good morning to everybody as well. Bill, good morning. Theo, futures trading today. Sherlock. I'm going to put an update link that goes to our website in the chat right there. You've got the update link. That's probably your best first line opportunity for information about the questions that the gremlins have been getting into our partners' platforms. And we are, of course, again, having all hands on deck, trying to get to everybody's questions and difficulties. Alejandro, good morning. Will, Duke, my brother Rick, the Randolph to my Mortimer is with us this morning. He's been busy recreating for this summer here. So it's good to see you back here, Rick. Love you and miss you. Rusty Golfer, Tachyon, Jules, NASDAQ, Trading Research. Summer turns me upside down. And we got to kind of remember, it is August, and a lot of Europe tends to take the month off. So we may start to see some thinner markets, a little bit lower volume because of that. Shaw, good morning. No gremlins here this morning just yet, so we'll hope that starts to spread, or at least Gizmo will come and get rid of all the bad gremlins. Good morning, JD Royalty, Jason. Good morning. Yes, may our plans work today. Ulagbek, good morning. We are working on all of these issues, and we appreciate everybody's patience. If you know Top Step, we're going to make all of this right. Michael J. Dr. VJ, it's good to see you this morning. Andy, Joe, good morning. Location, great word for this morning, Joe. Thank you again for joining and always bringing those good thoughts and ideas. Rational Investor, good morning to you, sir. It's always a pleasure to see you with us. John, good morning. We're rocking out to the Dead and Company at Oracle in San Francisco on YouTube. Yeah, I saw Dead and Company just last month. I think it was in June. Yeah, beginning of June, with my kids who bought the tickets for me for Christmas. It was a great show. We had a wonderful time. Always a good time to go see them, but unfortunately, sounding like that's it. Andy, good morning. Robert, Grounds Hero, Jimmy's, Jason, Christian. The platforms, some of our partners are having some difficulties, Christian. If you were looking for an update, check out that update status page that I put in the chat here. That might give you some answers to your questions. There's no reason for this video if no one can trade. Well, it's kind of centered around one or two platforms. There are a lot of other platforms that aren't having those difficulties. And again, we are working on getting through all of this. There's a lot of questions and queries and difficulties. And again, we do have all hands on deck. We're hiring extra people to help get us through this. And again, as you know, if you know Top Step, we're going to make everything right for everybody. Okay? Yes. Please do remain patient. Good morning, Hadi. Good morning, Andy. Repapips, good morning. Trading Like a Bot, Dan, Jared, Ryan, Siri, good morning. DJ Teddy, good morning. Gurav. B-Drip Investments, we are addressing the Trade-Evade issue. We are working very closely with Trade-Evade and NinjaTrader on getting a quick resolution to this. Unfortunately, they are a partner, and we have to depend on the cooperation of getting all this done. Good morning, Christian, Ali, Broken Trader, B-Drip, RP, Ron Merlot. Good to see you. I haven't seen you in a little while. Dr. VJ, thank you. Mike, I am Saint. Good morning. Trading Research, JD. We are Alfred. Good morning. Trepidity. Good morning. Right. All right. ZK, thank you, Jack, for the comment there. Yes, we do apologize. We're not part of the support team, although I have been working with the support team to try and talk to traders and get their resolutions taken care of. Sam, it's good to see you here. Tachyon and Jay, everyone, good morning. So we want to keep in touch with these markets no matter what the outside situations are, and we've got some some kind of interesting opportunities for us today. I mean, our S&P is traded basically right to weekly kickoff low. And again, we're looking forward to getting all of these situations and issues resolved. And we are, again, working diligently to do so. We want to make sure that all of our traders, all of our users have the best possible user experience. And we know that that's been a tough road for the last week or two. And again, we are all hands on deck working diligently almost 24 hours a day to try and get all of these things resolved. So again, we appreciate your patience. Let's look at the S&Ps now. Let's take a look at these charts. So we yesterday broke below our upside digestion balance area. Did it do well? Well, we had some pretty good volume. There was over 4 billion contracts traded on the New York Stock Exchange, but I don't think it was excessively huge. We had actually a higher volume here when we were still range bound last Thursday than we did on the push to the downside yesterday. We added only 4,000, and that's an estimate for the number of open interest that we added yesterday. So I'm looking at this as some long liquidation as well as some possible new shorts coming into the marketplace, but it doesn't look excessive to me. Usually, if you see a breakout of this kind of magnitude, you're going to see a much bigger increase in open interest. So I'm giving this breakout to the downside sort of a C minus. I don't think that it really brought in an overall market state change. Yes, we broke the low of the balance that we've been in for a 3 weeks. Now the test, I think the real test is going to be if we can't hold this weekly kickoff low that the overnight market traded within a tick of. Okay, so what are these weekly kickoff levels? I calculate them on Fridays for the following week, and these are levels that I believe the longer time frame traders will begin to make some bigger decisions. Are they going to leverage into longs here? We know that we've been hearing and reading over the last couple of months that a lot of the longer time frame participants, banks, funds, they've been underinvested here in stocks and in futures. So this may be their opportunity to kind of get a little bit of a bargain. But again, we've got to be able to hold between 45.10 and 4,500, 4,490. This whole area here is going to be really kind of critical. So we're going to be looking for possible opportunities at this weekly kickoff low as it is in play today, as it was in the overnight. So that open interest of 4,000 increase, I'm viewing as somewhat inert. It's not giving me the indication that a new downside auction is doing well, at least not yet. It did okay. It didn't do great. So now let's take a look at the 30-minute chart. So, okay. Yesterday's range, obviously, we started to get a little bit worried, right? We broke out below last week's low, which is largely the range that we've been in and we've accepted below it. Settlement price 45.37. Overnight inventory. We started the overnight right up here. We're currently trading lower. There is some overnight short positioning. Overnight inventory is usually shorter time frame, weaker hands traders. You see that the volume is very low overnight. That's telling us that there's no major participants really involved in the overnight trade most of the time. So we're going to be kind of looking at a gap open. If we were to open now, we'd open with a gap, which gives us gap rules. If we cannot close the gap relatively early, we're going to be looking for opportunities in the direction of the gap, which would have us leading to short positions. Now we also know that we've got a kind of a major inflection level below price, which is the weekly kickoff low and our overnight low. This is going to be somewhat pivotal today. Now we saw recently that the weekly kickoff high in crude oil became magnetic. Sometimes that happens. Sometimes it takes some time for longer time frame participants to make a decision in the current risk off kind of attitude I think that the markets have. If you'll personify them, this is going to be a critical level for price to be able to maintain above. Any sign of acceptance below changes, I believe, the longer time frame market state, and we may see this market continue a move to the downside. Now, Fitch downgraded our credit rating yesterday. Their prediction is for the U.S. economy to enter recession at some point near the end of this year. That's part of what the pullback has been. How important is it going to be as traders kind of put that behind them, the market digests it, is going to be very important for us today and moving forward. Now, that said, we know we have unemployment numbers tomorrow, non-farm payrolls, private non-farm payrolls, unemployment rate. This is going to be a hotly watched number tomorrow morning. We also know that we have Apple and Amazon earnings out after the close today. So are we going to be making any major decisions as longer time frame traders today? I'm thinking there's a lower probability of that. But hey, as we always say, ACH, anything can happen. Anything can happen. Okay. All right. So here's the TPO chart for the S&Ps from yesterday. We had a gap. We were unable to close the gap, which had us looking for shorts, which would have paid us the better part of the day, right? I mean, obviously the market moved lower. It did put in an attempted late spike at the bottom here. It's not a true late spike, but it is kind of an unfinished downside auction. There is excess here, but it's very low excess. The excess is on the high. Price was too high on the open. Sellers took over and basically held control all day long. No major buying tail at the bottom of this, and now we're going to be opening with a gap below that. The market is still accepting lower pricing. Weekly kickoff low, our overnight low. That really looks like I almost want to say a fun level to look for opportunity. Anything can happen. No, now the NASDAQ, give me 1 second here, excuse me. All right, so the NASDAQ broke the balance area again, similar to the S&Ps that we have been in yesterday. There was a much bigger increase in open interest. Volume wasn't tremendous, but we did add 6,200 contracts in open interest. Weekly kickoff low we haven't reached it yet. Actually, the NASDAQ has been presenting and holding up as a little bit stronger of a market here, I think, than the S&Ps. We've got this trend line has to be moved. There it is. So we've got point of contact, point of contact, point of contact. Where does this come in with the weekly kickoff high today? These convergences can sometimes create big opportunities. We've got a ways to go before we get down to that level. And, this is kind of the area where the S&Ps, these highs here, where the S&Ps weekly kickoff level is. So these highs here might be something to look at if we continue to move lower. The convergence of a weekly kickoff level and a long time frame trend line. If we do manage to bring price down below this and close below it and show some volume participation, time and volume down below this level, then I would think that this market might be set for a bigger pullback. I'm not predicting that. I'm just trying to put things in context so that I can put together my hypotheses, and with those hypotheses comes the strategy with which to trade the hypothesis that begins to ring true. Here's the 30-minute chart here for the NASDAQ. Gap, little bit of weak structure above the market, but we're not looking at that right now until there's some sort of a reversal. Overnight inventory also short. overnight inventory also creating a gap. And then we've got a little bit of space down here before we get to our weekly kickoff low. Take a look at the TPO chart. What does it look like? Excess high. Yes, there is a gap. Yes, there are naked points of control above. But the excess high and the low excess low indicates a potential unfinished downside auction, which is currently underway below yesterday's range, below price, gap close. Do we or don't we? And then, if we do open outside of range in either the S&P or the NASDAQ, and we do get back inside range and accept inside value, that could bring us to higher value at some point throughout the day today. Again, unemployment tomorrow, big earnings, Apple and Amazon after the close. Who is going to be the major participant that's going to drive price big time one way or another today? I think there's probably a bigger chance of them waiting until after the non-farm payrolls and unemployment tomorrow. I don't know. I'm not predicting. I'm just postulating and hypothesizing, and that is how we kind of prepare for the trading day. I mean, that's how I prepare for the trading day. I have a sheet that I go through in each market, and I say, how is the auction process doing, or is it just ranging? All of these things are things that I kind of digest to try and put like a three-dimensional picture of the market in place instead of looking at things in just 2 dimensions. So we have the chart here, which is 2 dimensions. Here's crude oil. We had a lot of struggle holding above that weekly kickoff high. A draw in crude oil inventories should usually mean lower supply, mean higher pricing. It didn't happen yesterday. What did happen? Well, our credit rating was lowered, and there was a prediction of recession, which should maybe lower the demand for crude oil. So we had kind of an opposite day yesterday. Sometimes we have to buy the rumor and sell the news. That's an old cliche from the green room many years ago. So what happened yesterday? Well, we lost 15,000 in open interest. A lot of longs bailed on this, on big volume, big increase in open interest. Big loss in open interest. This was a lot of longs saying, all right, we're out. We're not getting any more to the upside, even with a draw in crude oil. We better get out of these. So they got out of them. They brought price back down below weekly kickoff low. Is this a pretty decent reversal pattern? We did open, we traded higher, and then we closed lower than the previous day. Reversal pattern. So now does that mean we start looking for opportunities to possibly sell strength? It might. If I'm looking at what the auction is telling us, the upside auction has ended and a new potential downside auction has begun with that reversal pattern. And again, recession fears return, and recession means lower demand for gasoline, lower demand for crude oil. We're not in a recession by any sense, but just the mention of it sometimes is enough to cause a little bit of a panic, which I think we saw yesterday. Now that we're seeing the market after the open grow some legs, and it traded basically that value area high. This should not be here. This was already checked to value area high, looked above, now back inside. This is repair, ladies and gentlemen. You ask what repair is? This is repair. What else do I want to show you? Yes, there was repair potential, and it is already repaired. Here's what we're talking about when we talk about repair. This doesn't look right. Here's the 30-minute. Well, yeah, I guess, it did before the open. Look at the volume here on the 730 bar. So when the market opens between 2 known high volume nodes or high time nodes in a double distribution trend day, the market has a tendency, if it opens between them, to trade to at least one, if not both. Here it is on the TPO chart. So the market was at 730 trading here. It wouldn't go lower. So what happened was well, I don't know how much the economic information had to do with this, but 7:30, the market traded from this point of control to this point of control. That, ladies and gentlemen, is repair. Has it happened in the regular trading hours? No, not yet. But look at the amount of volume that happened pre-open here when this market took that move to the upside. So we've already shown that the market is setting up for a repair day. Point of control in this upper distribution, maybe here. Point of control in this distribution here. Maybe there's an opportunity for us to look for a potential range day between those two levels. Here's gold. So how did gold do yesterday? Well, it broke below weekly kickoff low. It closed below weekly kickoff low. Volume was not bad, was pretty good, but we only added 700 in open interest. A positive open interest on a breakout day like that is good for the continued downside auction. However, how good did it do? So what we're kind of looking at is a potential move down to these bottoms of these candle bodies down here in 1955, and then eventually possibly the swing low here from the 29th of June, which takes us basically right down to 1939. But we've got to be able to maintain meaningful participation down here. The dollar continues to leak higher. I'm not going to be looking for any longs until we see some sort of a break off the highs in the US dollar. So here's the 30-minute chart. Back to the daily chart here. I'm not really that impressed by this breakout to the downside, although I'm not going to fight it. But I don't think it performed very well. It's kind of an below average breakout. But we see the market continuing to push to the downside. So don't fight it. Here's yesterday's move to the downside. Once it got down there, it did what gold does. I mean, there's a big move, and then it just lays there. Call it a dead cat bounce. We did settle below weekly kickoff low. We have not been back to check weekly kickoff low. Overnight inventory until recently was just largely flat. If we opened, I believe, down here, we traded into value and rejected, at least for now. If we do find acceptance back in value from yesterday, we could feasibly the value area special situation play, which takes us all the way to the high of value from yesterday. So it's all about rejection of value from yesterday. We maintain price below it to continue lower, or acceptance above value area low here in gold, which kind of puts us at 1969 approximately. This is the volume value low. What's the TPO value low? TPO value low also very low here. You got to remember that the value area relates to the position of the point of control. So we've had one look up inside value from yesterday, so far rejected. We start spending time and showing acceptance here. I don't think that shorts would be a good idea, because we may see the market come all the way back up to value high, which repairs yesterday's double distribution trend day. Excess high, excess low. If we can't continue to hold price below this level with meaningful participation, then maybe we just see a hangover day or a pullback day or a repair day back to the upper distribution of time and volume yesterday up there. Here's the euro. Dollar continues to try and push higher. The euro continues to try and push lower. Yesterday, we broke below last week's low, and we only reduced open interest by 300. That is largely inert. Look at the low volume on this continuation move to the downside. This is saying to me that this downside auction may be getting a little bit aged. It's getting a little bit tired. It's not bringing in new business. It's beginning to take out old business. Now, a lot of this, of course, depends on the dollar. And if the dollar continues to move higher, that's going to continue to put downward price pressure on the euro. But what the market is telling me on this daily chart with volume and open interest is the auction to the downside yesterday did not perform all that well. Take a look at the 30-minute chart here. Here's our down move. Settlement was 109.67.5 ticks. We've opened in range. We've opened in value. Be patient. Let the markets establish an early range. You know, our overnight low, overnight high. Well, our overnight high is right here. We looked above it. We have failed to continue above it. Now to check the overnight low. I'm going to be patient, let the market establish an early range because there's very little change in the perception of value of the euro right now, even with the dollar kind of leaking higher, keeping downward pressured on this market. You know, the opportunity, maybe the best opportunity of the day came at value high from yesterday, especially after it failed to hold above the overnight high. Seeing a pretty decent move to the downside here. Here's the TPO chart. Low excess low, unfinished downside auction. Excess high, normal variation day. Look at the profile from yesterday. I find this pretty kind of unusual. This is the front month. This is where all the volume is. This profile looks more like a market that is a second month or a third month contract because it's so toothy. You've got anomalies here, anomalies. Anomalies are things that don't fit, that stick out, that may be eyesores. And believe me, markets are extremely visual. So this profile here yesterday does not exude confidence in either direction. And that is supported by the lack of change in open interest, only losing 300 in open interest yesterday. The market is trying to figure out its next move. It doesn't know what it's going to do. So opening in range, opening in value, stay patient, let the market establish its early range, focus on the extremes for your opportunities. Let's take a brief look here now at the 10-year. Rates continue higher. Price continues lower. Yesterday, we didn't really have a big day yesterday, more of almost a balancing day, but we did add 9,300 in open interest on a down day. Not necessarily big, maybe somewhat inert because of the sheer number of open contracts here in the 10-year. Low volume. Still seeing this market continue to the downside. I don't want to fight this downside move because I think it's very structurally sound. Where I'm looking at is, you know, we've got this low here from the 6th of July, 118.05. That's a swing low. Maybe difficult for price to kind of get through that level. I do not suggest trying to step in and pick bottoms. However, in any market, what does this look like on the 30-minute chart? Overnight inventory was short. Overnight inventory may be reconciled largely, and now the sellers are still coming in and bringing price down to lower. I'm going to venture to say that the yield is continuing to creep higher, which we talked about that at the beginning of the prep here. Yes, it is. Where did we trade to? Value area low from yesterday. We are rejecting value, at least for now. So keep an eye down there. If we do start to base there around 110.05, which is really almost right where we're at down here. If we start to base there, you know, there may be some opposing decent moves to the upside, but nothing that I would feel like I want to fall in love with. By falling in love, meaning if I do catch a long and it's in profit, I'm going to be really reasonable with my profit targets until something changes here. Where's that TPO chart? Here it is. All right. Excess high, poor low, excess. We were seeing a lot more excess on the highs of these ranges than on the lows. So, you know, the market is actually doing, I think, a relatively decent job in this auction process to the downside. Like I said, this swing low is probably going to be tempting just make sure to limit risk if you are going to be trading against the bigger time frame market state. And that's what this whole thing is about, is market state and context. Hopefully this has been helpful to you. We know that there have been a lot of issues with some of our partners. Here is an update page you can check out. Maybe your answers are going to be here. This is your first step to getting some answers. The entire team has all hands on deck to answer all your questions through support. But again, there are a lot of them. It's going to take us some time. Be patient. If your platform isn't operating correctly, then you might want to think about just kind of kicking back, just watching the markets for a little while. And again, if you know Top Step, we're going to get this straightened out and make it right for everybody. So let's take our deep breath. Stay humble, grateful, patient, and centered in your trading today. We're looking forward to all of your success, and we do appreciate everybody's patience. And so I guess that's it. We will see you tomorrow morning, hopefully on the market prep, and trade well today. Get out there and profit if your platform is operating correctly. Hope you have a great day. And again, we're working diligently to get this straightened out for everybody. It's going to take a little bit of time. And again, we appreciate your patience. So have a great day today. Get out there and profit. Have a great session, and we'll see you later.